Good day everyone, David Paul speaking. We're half an hour into the US trading day here on the 17th of April. And a very strong start to the day. I'm sure many of you have read about the vaccine announcement from Gilead this morning. And that's caused the US markets to open up very strongly. London's had a very strong morning, over a 3% day. As you can see in the US, the advances significantly ahead of that of declines. The short-term trend on VectorVest is up, underlying trend down, and clearly we've got a confirmed down in place. So there's a green light in the price column of the color guard. The price is up day over day and week over week. Yesterday we had a black star in that green light. If I put my cursor on that black star, it says that the price has been confirmed by the RT Kicker. And the RT Kicker is a momentum measure of momentum. So price is rising and momentum is rising to the upside. So let's just have a quick look at the VectorVest composite itself. And this is the VectorVest composite. The green and the red triangles are a medium-term market timing system called the DEW. And the DEW has been up since the 6th of April, and it's been quite a profitable time. The shorter term systems were up about a week before that, a day off the bottom. So we haven't had a confirmed up yet signal, which is the longest term measure of the trend on VectorVest, and until that occurs, those people following our worry-free trading plan should stand aside and plot. The market is rising, but the buy-sell ratio is really struggling to get off its knees. It's gone up a little bit at 0.13 on a scale between 0 and 2, but as you can see, this is still in a very mega oversold situation. The MTI has moved up and went above 1. When it goes above 1, the underlying trend turns to up, and the underlying trend was up for a couple of days. Underlying trend still down. Folks, from my technical background, I'm still a little apprehensive of this move. I know it's been a very strong move up today, but I showed a video the other day of the stochastic, but today we've got a similar situation where the price is making a falling top, but the MTI, the market timing indicator, is making a rising top. That's what's called bearish reverse divergence. I'll be speaking about it at the precision swing trading course, but nevertheless it worries me that that's the case. Nevertheless, the trends are in place, and I've been building positions mostly in the UK market at the moment. I've been building positions. I've got a few positions in the US market, got stopped out of a few bets in the US market and that little pullback, but the trends are up. So let's have a look at the SPX, maybe a number that you're more familiar with. It gapped up this morning and sitting at that very important level where this support is now sitting at resistance. I think it needs to get through that level before we're out of trouble here. So steady as she goes, guys. I think that aggressive players should be in this market. Until these levels break, I personally will be pulling my stops up very close to the market, and if we can get up through these levels well above 2875 on the S&P, then we should be well away here. The trends are starting to look very good indeed. The short-term trend is up. We've got a green light in the price column of the color guard. We've got a black star in that green light. The DEW is up. The underlying trend is down, and we've still got a confirmed down. My biggest worry is that that buy-sell ratio just doesn't want to get off its knees at all. So this market is rising on very, very low breadth on a few big tech stocks and semiconductor stocks. So until that changes, folks, let's be very careful out there and buy with caution and keep your stops very close to the market. This is still a trader's market, and I'll be a lot happier when I see that buy-sell ratio rising, and I'll be a lot happier when we get a confirmed call. That confirmed call in the US is a function of the buy-sell ratio, so this market's got a lot of work to do in North America for that confirmed call to appear. Until it appears, folks, conservative investors, in my humble opinion, stand and watch and plot. More aggressive investors that have got years of experience in managing risk and position sizing, then I think you should in fact be building and starting to build a portfolio in this environment. They can fall apart, and that's why risk management is so key. I hope you found this useful. Thank you. Bye bye.